Hi everyone, and a very warm welcome to today's webinar, which is Year-End Part 1, all about finishing your 2025 payroll. My name is Sarah and I'm joined by Duncan and my colleagues Alan and Ollie, who are standing by in the background, ready and waiting to answer your questions. Now, Duncan will be back a little bit later on. So this is what we've got lined up for today. So first, I will kick things off with an overview of the payroll year-end process. So we'll talk about how submissions are made now in real time to revenue and what tasks still need to be done when the year wraps up. Then I will move on to some practical steps, so showing you how to install your update and share a few handy tips to make sure everything goes smoothly when the time comes. After that, I'll be passing you over to Duncan, who will dive into finishing your 2025 payroll. So he's going to be covering things like extra pay periods, also known as week 53, holiday periods, small benefit exemption, and a bit of housekeeping as well. He'll then walk through the year-end process itself and show you how to produce the employment details summary report. And then finally, it'll be back to me to finish off with an introduction to auto-enrolment in the 2026 tax year. So we'll be looking at things like auto-enrolment criteria, scheme details, and how best to prepare for the changes. And as you know, this is only part 1. So we do have a part 2 webinar coming up where we'll look at setting up the new tax year, creating your payroll calendar, clearing balances, and what's new for 2026, including a little bit more about auto-enrolment. But you can sign up for part 2 using the link in the chat. It will also be in the follow-up email we'll send after today's session or on the links in the handouts as well. So make sure to get signed up for a part 2 if you haven't already. So let's get things started with a bit of an overview. So to give you some context, I do want to quickly recap how payroll information is reported to revenue in real time throughout the tax year. So on every pay date, as an employer, you'll start by retrieving the latest revenue payroll notifications, or RPNs, from Revenue's online service. This ensures that your employees are always on the most up-to-date tax credits and cut-off points. Next, you'll then enter the payment details on the timesheets as usual, run the end of period process, and then produce the pay slip and pay your employee. You'll also submit a payroll submission to revenue, and that'll include details of all taxable payments and deductions, which are going to make up your monthly liability. And you might also need to submit an enhanced report and submission to include any details of benefits or expense payments that fall under EIR as well. But Duncan will cover that in a bit more detail later on. Now, because you're submitting on each pay date, at the end of the month, Revenue already have enough data to produce your statement of account. And this statement is usually available by the 5th day of the following months, and it's going to give you a breakdown of your liability. So it's going to cover tax, PRSI, USC, and LPT. Employees can also log into the My Account section on the Revenue website to see their pay and tax details that you've submitted over on their behalf. Now, to make sure everything in your payroll matches what Revenue has, we do recommend running the Employer Monthly Liability Report. And we recommend running that at the end of each month. What you can then do, you can then compare and reconcile it with your Revenue statement of account. And if you do that regularly throughout the year, that's just going to help you keep everything accurate and up to date and spot any errors as they happen. Now, it might be that you want to repeat that process at year end as a final check. And because you've been doing this each month, when you reach the last day of the tax year, so December 31st, there's actually no extra reporting that you need to send to Revenue. All the official year-end documents are handled by Revenue and made available to employees through the My Account section on their website. Now, employees will receive an employment details summary, and that'll cover all their jobs during the year, along with an end-of-year statement that they'll then be able to access from January. Now, as an employer, you can still choose to produce an employment details summary report for your employees, or you might just want to keep it for your own payroll records. It is totally optional, but Duncan will be showing you how to generate that report later on in the webinar. So as you can see, there really isn't much left to do in terms of reporting to revenue at year end, but the main goal of today's session is just to make sure you close out 2025 correctly and set yourself up for a smooth transition into 2026. And we'll cover those steps a bit more in part 2. So I'm now going to move on to talk about installing your payroll year end update. Now, just a heads up, this hasn't been released yet. But should be released by the end of November, so next coming weeks. Once it is available, it will be available both as an automatic update within your software and a download from our help centre as well. Now, it is really important to install the year-end update as soon as possible once it is released, before you start processing your year-end tasks. So you'll need this update to generate your year-end reports and set up the 2026 tax year as well. I did want to give you an overview of how you would install it once it is released. So you would be logging into any of your payrolls. You'll be going to the help menu just up at the top and then clicking on check for updates. You should see a pop-up like the one on the slide, confirming that the update for year-end 2025 is available. And from there, you can just download and install it. Now, it might be that automatic updates aren't working for you, or you might just prefer to download the installer manually. And if that is so, you can find it in our help centre once it's released. But what I've done, I have put a link on the slide. So if you download the handouts, you will have access to that. And that's going to take you to our payroll year-end hub. And once the update is released, it will be made available in there. Now, I do want to take a moment just to walk through the installation screens together. So during the installation, you'll be asked to choose the installation type. And there are two options. So the first option is this computer installation. And what that's going to do, it's going to do a full installation of both the program and the data update as well. Now, that's going to be the right choice for you if you only access payroll from one PC, because it's going to update everything all in one go. Now, the second option that you can see on there is the client or server option installation. This is actually designed for multi-user setup. So if you access Sage 50 Payroll from more than one PC across a network, that's going to be the option that you're going to need. Now, here's an important tip. You do always want to update the server first. And when you download the update file, run the installer on the server. That updates the location where your shared payroll data is stored. And once the server is updated, you can then go on to update each client PC. If you try and open payroll on a client that hasn't been updated yet, you'll get a prompt to install the update right then and there. Now, the installer will actually run from the server location, so you don't need to download the update separately on each PC. Just make sure the server's done first, and then you'll be able to easily update the client PCs after that. Now, once the installation is complete, you will notice a new desktop shortcut for Sage 50 Payroll 2026. Now, you'll notice there is a slight name change there. So from Sage Payroll to Sage 50 Payroll, but it's nothing to worry about. It is still exactly the same product. Now, this update actually installs two things. So first, it's going to update your current tax year to version 28.2, which will add the year-end functionality that you're going to need. And second, it installs version 29 ready for the new tax year. Pretty easy to check which version you're on by looking at the top of the screen in the software, but I will be showing you a quick demo of this so you can see exactly what it's going to look like and what to check when the time comes. So I'm just going to bring these slides down now. So I'm going to start by checking if my update has installed correctly. So first thing I'm going to look at the version number at the top of my screen. So just in the top left here. So I can see that mine shows 2025 and version 28.2. So that confirms that the update is installed. Another thing I can look out for is it does state PYE 2025 ready. So when the update is released, if you are on a lower version, best thing to do to check if there is an automatic update outstanding, you just want to go to the help menu up at the top, like we've seen in the screenshots, and then you want to go down to check for updates. The automatic update service will find the payroll year-end update for 2025, and from there you'll be able to download and install it. Now, since my version of the software is already up to date, I do want to show you something else that's quite useful to know. And that is how to check where your program and the data are installed. So again, if you're logged onto Payroll, you would be going back to help. But this time you want to go to system information. Now on the support homepage, you want to be looking at this left section here. And you can see you have locations for program directory. You do want to make a note of this so you can confirm the update installs in the right location. So in my example, the program directory is on the C drive under program files in the Sage Payroll IRL folder. And that's going to be the folder that's being updated. Now my data directory is also on the C drive. And because I only use Payroll on one PC, I did this computer install, which updates both program and data together. Now, one more thing I do want to touch upon is you'll notice when you do install the update, there will be a new desktop shortcut. And that's going to be for Sage Payroll 2026. Now, if you do try and open this at this point, what you'll see is once this loads up, at this point, there won't actually be any companies available for you to log into. Now, that can raise alarm bells for some people, but it's absolutely nothing to worry about. Your payroll wouldn't show in here until you start completing those year-end tasks and set up the new year. So although the new icon will be there, you won't have any payrolls at that point. So that's a little bit on downloading and installing the update. Remember, this isn't available just yet, but once it is, hopefully you feel a little bit more confident on exactly what to do when it's available. Now, I do just want to run through a little bit of a recap of the key points. So remember, you'll either be running the update through the automatic update service or downloading it manually. That's going to then upgrade your 2025 version to 28.2 and at the same time install version 29 for your 2026 tax year. But remember, if you're working across a network, you want to update the server first and then update each client PC after that. Now, just to finish off this section, I do want to run through a few top tips to make sure the installation does go smoothly. So first one is timing matters. So try to install it at the start or end of a period. That just helps minimize any risk of any data issues during the upgrade. Second is to take a backup. So make sure you have an up-to-date backup of your payroll data. If anything goes wrong at that point, it just means that you then have something to restore. We checked our directories, so you can find your program and data locations under help and system information. So we took a look at that in the demo. We do advise logging on as an administrator, so you will need the right permissions to make sure your update installs correctly. But if you're unsure what permissions that you do have, your IT team should be able to give you a hand with that. And then last but not least, you do want to watch out for any antivirus software. So sometimes antivirus can block files during installation. If you see any pop-ups or run into any issues, maybe try temporarily disabling the antivirus and just rerunning the installation. 9 out of 10 times, that's going to fix your problem. So that's your first step, getting the update installed. So I'm now going to pass you over to Duncan, who will run through finishing off your 2025 payroll.
Thank you very much, Sarah. So you've seen there the first stage of the payroll year-end process, and that's to install the update, which will be available in the coming weeks. And I'm now going to talk about finishing your 2025 payroll, which is essentially what it says on the tin. So in this section, we're going to take a look at extra pay periods that may apply to you if you run a weekly, fortnightly, or 4-weekly payroll. We'll talk about holiday periods in case you need to run your payroll early or pay more than 1 week at the same time. We'll take a look at small benefits and how to process these in payroll so they can be reported to revenue, as it's quite common to give things like gift cards at this time of year. And then we will run through a bit of housekeeping once we've completed our final period before running on to the year-end process. So first up, extra pay periods. Now, this is something that will only apply to you if you run a weekly, fortnightly, or 4-weekly payroll. If you pay your staff monthly, there are always 12 months in the year, so you'll never have an extra pay period to deal with. But if you are on one of the weekly based pay frequencies, because the number of days in a year does not divide into an exact number of weeks, there are some years where you will end up with an extra pay period. So in 2025, with it not being a leap year, there were 365 days. If we divide that by 7, we end up with 52 full weeks and that 1 extra day. And if your pay date lands on that extra day, that is when you have an extra pay period. Now for 2025, you will only have an extra pay period if you pay weekly, fortnightly, or 4-weekly, and your regular pay date falls on Wednesday, the 31st of December. If you pay your staff on any other day of the week, you won't have an extra pay period this year, but you will do at some point in the future. Another way to think about this is to take a look at a tax calendar. So we have tax calendars that you can download from our help center, and it lays out the tax year starting on the first day of the year, which was Wednesday, the 1st of January. And if I scroll to the end of this calendar, you'll see in tax month 12 in December, we've got 52 full weeks. We then have that 1 extra day. And when your pay date lands on that extra day, that is when you have an extra pay period. Now, there is a really simple way to check if you have an extra pay period this year, and I'm going to show you that right now. So if I just bring these slides down, and I'm logged into my payroll for 2025, and I run a weekly payroll, so I need to do this check. And the easiest way to check is to take a look at your payroll calendar, which you can access by clicking company/payroll at the top of the screen here, and then coming down and clicking calendar. So from here, I can see the period numbers on the left-hand side, the pay date, which is what determines the tax period, and the bank date. And if I scroll all the way to the bottom of the screen, you can see that my last period of this year will be period 52. And that is because my pay date is a Friday. So my last pay date of the year is going to be Friday, the 26th of December. This means that I don't have an extra pay period this year because the next pay date, which will be Friday, the 2nd of January, will be period 1 in 2026. So I'll be processing that in the 2026 software. So that's the easiest way to check. If you're wondering what it might look like if you do have an extra pay period, I do have a screenshot of a payroll calendar that has a period 53. So you can see in this example, the pay date is Wednesday, the 31st of December. So that's the extra pay period in that scenario. If you run a fortnightly payroll, the extra pay period number is 27, and for 4-weekly, it would be 14. Now, once you know if you've got one or not, there's nothing you need to do differently if you do need to process that extra pay period. You would set the period number as normal. You will see a pop-up message just informing you that tax and USC will calculate on a week 1 basis. So that all happens automatically in line with revenue guidance, and there will be the week 1 indicator showing on that week 53 payslip. And if you want to read more about processing extra pay periods, I have linked to our handy guide. So download the handout and you'll be able to click through from there. Now, next thing I'm going to talk about are holiday periods. And again, this is something that would usually mostly affect weekly pay frequencies. Now, as the end of the tax year is the same as the end of the calendar year, obviously that falls around the Christmas period. So there is a good chance that you will be away from work in those final weeks of the year. You'll have a lot of employees taking holiday. You might even shut down over Christmas. And that could mean that you need to process your payroll in advance. And that can be handled in one of two ways within your software. Now, the first option that you have, which is arguably the simplest, is to process each separate period as separate pay runs. So, for example, you could run your week 51 payroll, entering the payments for that week, running end of period, and submitting the payroll submission. And then immediately after that, you could set period 52, and you could run through the same steps. Now, you'd end up with a set of reports for each separate period. And then because you're going to be away, you can either schedule the bank payments to be made on the usual pay date or nearest banking day. Or if you wanted to pay more than 1 week at the same time, you could add together the net pay values from each period and pay your employee the total. Now, the other way you can handle it in payroll is to process a holiday period. And what this will do is it will automatically apply the extra allowances for tax credits and cut-off points for the period that you're paying in advance. The advantages of doing it this way is that you get a single set of pay slips and reports showing the total payment being made and the total net pay. And if you produce bank files in payroll, you'd be able to create a single bank file with the full amount to be paid for all of those periods. A couple of caveats to holiday periods are that they must not be used for the extra pay period, Wednesday 31st of December. That needs to be done separately because it requires a week 1 calculation. And if you're covering pay for any pay dates in the new year, they would also need to be processed separately in the 2026 software. Now, again, we have linked to our guide with more steps, information on how to do this. But just to give you an overview, if you need to apply or if you want to apply a holiday period, you can do it in one of two ways. If you need it to apply to all of your employees, when you set the period for the earlier pay date, simply increase the number of insurance weeks to the number of weeks that that payment will cover. So in the example on screen, we're setting period 51, but we've changed the insurance weeks from 1 to 2. And that means when we go into enter time and pay, it will automatically apply double tax credits and cut-off points. And for any payments that are set up to be included in holiday pay, it will also automatically multiply them up. Now, if it's not all of your employees that you want to do this for, you can apply a holiday period on an individual timesheet. So on the right-hand side, you can see there's a holiday periods box. So it's the same example. We're processing week 51. We've entered one holiday period because we also want to cover week 52. And you can see there that it's applying the double tax credits, double cut-off points, and the salary in this case is being multiplied up. So I'm not going to demo that, but if you do need the step-by-step, you can find more information by following the link on the slide. Now, one other consideration to make when processing payrolls at this time of year is that you may be providing your employees with small benefits, such as gift cards, which can be provided tax-free as long as it's up to 5 benefits per year and the total value does not exceed €1,500. Now, since 1st of January 2024, non-cash benefits provided under the small benefit exemption scheme must now be reported in real time to revenue as an enhanced reporting submission. Now, for some of you, you might have done this for other expense payments such as travel and subsistence, so you'll be used to the process, but a lot of employers might only deal with small benefits once a year around this time of year. So I'd just like to show you how you can include these items in your payroll, and then you can submit the required information to revenue. Now, if you don't want to put it through payroll, that's fine. You can do a manual submission by logging in to the ROS portal. but you should include any small benefits in the same period that they are actually provided to your employees. Now, when it comes to processing these, you will need to process both a payment and a deduction, because a small benefit is a non-cash benefit, so it's not included in the employee's net pay. So we need to record the value of the benefit using an expenses payment, but then we need to take away that same value as a net deduction. So the employee's net pay won't change, but you'll then be able to report the small benefit as part of an ERR submission. So that's done at end of period around the same time that you send a payroll submission. So let's bring that all to life by processing our final period of the year. So we'll just bring these slides down again. And as you can see, if you look at the bottom of this screen, I'm running a weekly payroll and I'm processing period 52. So I've already set the period, which will be my 26th of December pay date. And this week, for some of my employees, I've given them a gift card as well. And I need to report that as part of an enhanced reporting submission. So I've already set the period and I've checked for the latest RPNs. Before I go into enter time and pay, I'm just going to show you the payment and deduction that I'll be using for the small benefits. So you would set these up from company/payroll. And I'm going to go into payments to start with. Now, I've already got one set up, and I've just abbreviated small benefit exemption as the name. And if I just show you the settings of this payment, it is set up as an expenses payment, which means it will be included in ERR submissions. And I've selected the category already of small benefit. So that's going to automatically categorize when I do the submission. If you don't already have one, you can create a payment by clicking new. You'd give it a name here, and then again, you would choose expenses and small benefit. As well as the payment, I've also created a deduction, and I've given it the same title. And this has been set up as a net deduction after tax, PRSI, and USC. And it's a standard deduction as opposed to a pension. So because I've already set those up, when I go to enter time and pay, and I'm just going to use the batch entry method, I've already got that payment and deduction listed in this screen. Everyone's going to get their usual salary, or they've worked their usual hours, so I'm not going to make any changes here. But for my first employee, Effie, I am going to enter a small benefit amount of 500 euros. So if you check the net pay at the moment, it's 495.60. I'll put the 500 euros in. It's gone up to 995.60. But with this being a non-cash item, I need to deduct the same amount, so 500 euros. And you can see that the net pay has returned to the usual amount. If we take a look at the detailed entry, so this is the time and pay screen that you might be used to if you do it using a non-batch method. We've got our 500 euro payment. We've also got the 500 euro deduction. And on the pay slip, if I just show you the preview, we've got the same item on here. So 500 added, 500 deducted, employee receiving their usual net pay. Now, I've actually got a couple of other employees that I want to add this to. So I'm going to quickly add the payment and the corresponding deduction onto their timesheets. We're going to save the valid records. And what I can then do is to complete my pay run in the usual way. So I'd run control summaries, gross to net reports, and run end of period. I would then do my payroll submission, again in the usual way, and this will report the taxable pay and deductions to revenue. And because this period, I included some ERR items, the small benefits, I would also send an enhanced reporting submission. And you can see it's picked up the 500 euros expenses, and it has automatically categorized it as small benefit because that is how I set up the expenses payment. So everything's categorized here. I don't have any other benefits or expenses to report. So I'm going to click onto next. I can then see the details of this submission, so total values and number of employees, and I can go ahead and send that. So that has now been completed. And if you do need to report anything under enhanced reporting requirements, remember to process those items in the period that the employee receives them. So I am now at status end of period for my last pay date of the year, 26th of December. So I'm ready to do a little bit of housekeeping before I move on to the year-end reports. So if you do want to learn more about ERR, you can find more from the link on the handout, which will take you off to our help center. So now that we are at end of period for our last pay date of the year, I've got a couple of housekeeping tips to share with you. The first of which is a little bit of reconciliation to make sure that the records stored in your payroll do match up with what's actually been submitted to revenue. Now, at the start of the session, Sarah explained that at the end of each month, based on your submissions, revenue create a statement of account. And we suggest that you compare that with the employer monthly liability report in payroll, just to make sure everything matches up. And if you've been doing that throughout the tax year, great stuff. It means that everything has been checked at the time, but you may wish to repeat this exercise at the end of the year. Now, you can get the revenue statement by signing into the ROS portal, or you can get it directly in payroll from the direct reporting menu. So I want to show you how to run these two reports and what you should be comparing. So again, we'll bring the slides down. And first thing we'll take a look at is the revenue statement. So within your payroll, you would go to the direct payroll reporting option at the top of the screen here. You can then click on revenue statement of account. You should hopefully have your ROS certificate already saved. So you would click onto next, and then it'll connect to ROS and it will retrieve submission totals up to the last completed tax month. So because we're currently in the middle of November, we can retrieve statements up to October. Ignore the numbers that you're seeing here, as these are just for demo purposes. But the idea here is that you'd be able to check the total liability for each month and compare it with the employer monthly liability report. Now, rather than just viewing this on screen, you can export it using the export details option, and that's going to generate the same information as a report. And what you can then do is to print it or save it, and then you've got something to compare with the other report. There's also information on what might cause differences, which I'll come back to when we've looked at the monthly liability report. So that's a handy way of retrieving your revenue statement within payroll. The report to compare it to can be found in the other reports area from the process map. You would go to the company tab and you would then select employer monthly liability. Now, when you run this report, and I'm going to choose preview so I can show you it on screen, it's also going to show you any other payrolls that are linked to this employer. Because when you're comparing this with a revenue statement, you do need to compare all of the payrolls that are submitted under the same ROS certificate. Now, in my simple example, I just have one payroll, but if, for example, I had a monthly payroll for the same employer, I'd be able to tick the box to include that in the totals. So let's click continue, and we do have options of showing quarterly subtotals or PRSI breakdowns, which I'm not going to select. And if I click OK, you can see the same information laid out the same way. So a breakdown of tax, PRSI, USC, and LPT, and then monthly liability figures from January all the way through to December. So at this stage, I could check all of the months up to October, which was my last completed revenue statement. And then come early January, you'll be able to complete this for the remaining periods of the year. Now, if you see any differences in the liability totals, here are some common reasons for the differences. So first of all, it might relate to a correction. So if you do a manual correction on the ROS portal, but you don't make that same correction in Payroll, that would explain why the numbers are different. Or if you make a correction in Payroll, but you forgot to resubmit the payroll submission for that period to ROS, that would also explain a difference. Or if you've forgotten to do a submission in Payroll and you're finding the figures on your revenue statement are lower, you may need to go back and resubmit for the period that was missed. So that would usually account for any differences in an individual month. If you find that all of the months are different and you've got multiple payrolls, the most likely reason for that is that you're not comparing like for like. So remember to choose all payrolls that you submit using the same ROS certificate when comparing that with your revenue statement. So that's the report from the company tab here. And that will just give you peace of mind that what you've submitted does match up with what's saved in your payroll records. So on the handout there, a couple of screenshots of the revenue statement compared to employer monthly liability. And if you click on those links in your handout, that'll take you to our support guides with a bit of further information. Last bit of housekeeping before we move on to the year-end report is to validate your payroll data. Now, again, this is a task that most of you will be running each time you set a new period in your payroll, as there is now a setting to automatically validate payroll data at start of period. But it's a good idea to run this check again manually at the end of the year, just to make sure there are no issues that might need your attention. So what you're hoping to see when you run validate payroll data is no issues are found. But if issues are detected, it will always give you the full detail of what the problem is and the steps that you would need to take to resolve it. So I just want to quickly show you how to run this tool. So again, jumping back to the demo, you can find it in a few different places. If you run the pay run tasks, you'll see it is the first task in the list. So you could run it from here, or you can go to reports, validate payroll data, and you can click validate payroll data just here. That will then run the checks on your payroll. And if anything is identified, it'll show the number of issues found, either as company, employee, or GDPR issues. You'll be able to click on the link to see further detail of what the problem is, and you can export that information to PDF. And you'll find links to our support page, which will tell you what action you may need to take. Now, the good news here is that no issues are found. And the main reason for that is my validate payroll data settings, which I can change here at the bottom, are set to automatically check at start of period, but then only show results when issues are found. So for me, this has been running silently at the point I run start of period or set the period. And because no results have been found, it's just moved on to the next stage. But if there is something that requires my attention, it'll show me on screen and I can deal with it there and then. So yeah, that's a little bit of housekeeping just to make sure everything is in order before you move on to the year-end process itself, which these days is really simple, as all of the hard work is now done by Revenue. So they will provide all official documentation in the form of employment detail summaries and an end-of-year statement. So employees will need to log in to my account on the Revenue website to get those documents, and they're usually available early on in the new year. But as an employer, one step you could choose to do is to run the equivalent report in your payroll, the employment detail summary report, and that can either be kept for your records or it could be issued to employees for their reference. So a quick look at what's on that report. So you can see on the screenshot, it shows the employer details at the top, the employee details, and then totals for their pay, tax, USC, LPT, and PRSI. You can provide a printed copy to your employee, or you might choose to export the whole report as a PDF and just store that with your payroll records. Now, this step is optional. All the official documentation is dealt with by Revenue. But just to show you how to run this report, let's jump back to our final demo. And we actually access this from the year-end tasks. So first of all, quick check that we are at end of period for our last pay date of the year, which in this example was week 52. And as we are, we can go to year end. We would then go to tax, and then we would select tax year end reports. Now, just to let you know, that tax menu is only available once you've installed the year end update. So you won't see it just yet, but once the update's released and you've installed it, that's when you'll be able to get into these options. So from the year end reports, I'm going to choose employment details summary, and I can include leavers if I wish to by ticking this box. And then we can either print directly, we can preview first, or we can export to a PDF directly from this screen. So we'll take a look at the preview. If I just click on the preview option, you'll see that we have one report per employee, given their details, the total of their pay and deductions for the year. And there's a note at the top telling them it's for reference purposes only, and they get the official version from my account on Revenue's website. So if you want to provide a printed copy, you can print the report from here. If you want to export it for your own records, you could hit export and save it as a PDF. So I'm just going to drop that onto my desktop, give it a name there. Just a word of caution, you might have noticed an email option at the top of the screen, but that will not email individual reports to your employees. That will always attach the full report that you're seeing on screen to a blank email, and then you can type an email address and send it. So obviously you don't want to send this full report to your employees, so they would get a printed version instead. Now, if you did want to produce just an individual employment detail summary, you could use the sort and filter option. So if I just wanted one for employee code 0001, which is the first employee in my list, I could put that in the from and to boxes. And if I preview the report this time, you'll see that I do just get one report, page 1 of 1, which I could then save as an individual PDF, potentially could email it. But this report is designed to be printed or a full copy saved for your own record. Once you've got that report, you're pretty much done for 2025, and you are then ready to move on to the steps for getting into 2026, which we will be covering in year-end part 2. So just before I hand back to Sarah, quick recap of the steps to finish your 2025 payroll. Number 1, we checked if we had an extra pay period. So that's for weekly, fortnightly or 4 weekly payrolls, and only occurs this year if your pay date lands on Wednesday, 31st of December. We've completed payroll for all our pay dates in 2025, and we included some small benefit items in one of those periods so we could submit it under ERR. We've then reconciled our reports, we've ran validate payroll data, and we've finished by printing the employment detail summary. And you can read about these steps and get the step-by-step instructions following the link on the slide. So that's it for finishing 2025, but I would now like to hand back to Sarah, who's going to talk to you about automatic enrolment. So over to you, Sarah.
Thanks so much for that, Duncan. So what I want to talk about now is something that will be new for the 2026 tax year, and that is an introduction to auto-enrolment. So auto-enrolment or automatic enrolment is Ireland's new retirement savings scheme. It's designed to help employees build pension pot through shared contributions. And this is going to come into place on the 1st of January 2026. And it'll run under the name My Future Fund. So employees will contribute a set percentage of their gross salary. Employers will match that contribution, and the state will then add a top-up as well. Now, the goal of this is just to make saving for retirement easier and more accessible, whilst it simplifies the process for you as an employer to operate a workplace pension. Now, the scheme's going to operate under My Future Fund and it'll be managed by NERSA, and that just stands for the National Automatic Enrolment Retirement Savings Authority. Now, they'll oversee enrolment, contributions, investment and communication. And just like any existing pension schemes, NERSA will be supervised by the Pensions Authority when everything launches in January 2026. Now, I do want to talk about auto-enrolment and who will qualify. So, to be automatically enrolled in My Future Fund, employees must be aged 23 to 60. They've got to earn over €20,000 annually and not already be in a pension scheme. Anyone outside the criteria can still opt in voluntarily though, but there is a bit of an important note with this one. So if an employee does have multiple jobs, it is their combined earnings that will make them eligible. So even if their earnings with you as an employer are below the €20,000, they can still be enrolled anyways, because it will look at multiple jobs. So eligibility will be based on earnings, not contract type or length. So if you have any seasonal workers, part-time staff or anyone on probation, everyone will be considered. So it will all just be based off earnings and age. Now, you might be wondering how contributions are going to work to My Future Fund. So contribution rates are going to be fixed. So no changes will be allowed whatsoever in these early years. So employees and employers will each pay the same amount. Now, instead of tax relief, the state will add a top up. So they'll top up the scheme. So in these 1 to 3 years, you can see that's 0.5%, but that will gradually increase as the timeline goes on. So those gradual increase will happen over the first 10 years of the scheme. So it'll start at 1.5% for both employee and employer. And then it will increase by 1.5% every 3 years. Now, by the 10th year, both employee and employer are going to pay 6%, and the state will add a top up of 2%. So over time, total contributions are going to jump from 3.5% up to 14% over that 10-year time period. Something I do want to note with this one though is if someone does join, say in year 8, for example, they will just automatically join at the 4.5% rate. So it is based on the scheme timeline, not their career timeline. So totally depends what time they start, but it won't revert back to that 1.5%. Now, there is a contribution cap, so contributions are based on gross pay, including bonuses, overtime, but they are deducted from net pay after tax. So there is a cap of €80,000. If someone does earn more than this, so if you've maybe got some high earners on the payroll, then contributions will stop and reset each year. Now, how does NERSA assess the employee's earnings? So NERSA will use the revenue payroll data to identify any eligible employees that are going to need to be auto-enrolled into the new scheme. And they look back up to 13 weeks to check those earnings. So if that look back period shows that the employee would earn over the €20,000 annually, they'll then be auto-enrolled and they'll stay enrolled even if the earnings later drop. The look back just ensures fair assessment for any new hires, and it prevents short-term changes in pay from affecting anyone's eligibility. And remember, I did touch on this earlier, but the look back does cover all employments, not just yours. So previous earnings with another employer will still be counting towards that threshold. So definitely something to bear in mind, especially with any new starters. Now, I do want to talk more about employee choices under auto-enrolment. So first, employees can choose to opt out of the scheme, but that is only in months 7 and 8 after enrolment. And if they do, it is only their own contributions that are refunded, so employer and state contributions won't be. Now, with it being just months 7 and 8, you're unlikely to see any of these in the early introduction of auto enrolment, but it is definitely one to look out for. Now, second, employees can choose to suspend contributions for either 1 or 2 years. During that suspension period, all contributions will stop. So that's employee, employer, and state as well. There will be no refunds with the suspension option, and then contributions can only restart after at least 1 year. So once they do choose to suspend it, they need to stick with that for at least a year. Now, finally, employees who do choose to opt out will be automatically re-enrolled after 2 years, as long as they still meet the eligibility criteria. Now, this just helps people from forgetting to rejoin. And of course, if they do still want to opt out, they can opt out again through the online portal, and you as an employer will receive an updated AEPN for that. These options, they're just going to give employees flexibility around the new auto enrolment that's coming in January. Now, you heard me mention an online portal there. So this is the pensions online portal. And NERSA will be launching a secure portal for My Future Fund, and it is expected in early December. So that's ahead of the January rollout. Portal will be accessible to both employers and employees, but as an employer, you will need to complete your profile and set up a direct debit as soon as the portal launches. That is just to ensure all of the contributions transfer smoothly. Once it is released, you will log in with your existing ROS certificate details. And remember, if you get onto that as soon as it is released, registering and completing everything early is just going to help you as an employer stay compliant and avoid any penalties as well. Now, from the employee side of things, employees can access the portal as well. They'll access their account using their MyGov ID. And from there, they'll be able to view balances, contributions, investment returns, and update any of their details or opt out or pause any payments as well. Now, Revenue or NERSA are going to confirm when the portal is live, but as I mentioned, it is expected early December. But I have linked more guidance on the handout, so do get it downloaded, because once it is live, it will be that link that is updated with further information. So not a lot really to prepare for auto enrolment just yet, but I would strongly advise getting signed up to the portal as soon as it is made available by NERSA. Now, I do want to finish things off by just recapping some key points. So just a quick recap here. Remember, it is mandatory for eligible employees unless they opt out, but that will just be in months 7 and 8. There is a cap, so it is capped at €80,000 gross pay. It will be calculated on gross but deducted from net. And remember, those opt-out and suspension options are available. Now, I have included in the handouts just a quick summary of the key points around My Future Fund and the new auto enrolment. There is some really handy links on there as well. And the slides here just for your quick reference, so make sure to get them downloaded. And you can use this just so you have all of your key points handy. So that brings us to almost the end of the webinar today. I do want to finish things up by running through some further support and some time for questions at the end as well. So as you all know, there is also a part 2 webinar. In that session, what we're going to be doing is guiding you through setting up the new tax year, creating your payroll calendar, clearing balances, and we'll explore a bit more about what's new for 2026, including how the new pension scheme is going to integrate into your payroll process. So there will be some demos on that as well. You can sign up for part 2 using the link in the chat or in the follow-up email we'll send after, or of course via the link in the handout. You want to shout out the help centre real quick, so that's sage.ie/help. Really great resource. So you can see we've got our payroll year end and auto enrolment hubs on there. So you have access to all of our support guides, on-demand webinars and info on how to get in touch with the team if you need to. So we have went through a high-level overview of what our enrolment is going to mean to you today. However, we do have some further training options available that are designed to help to make this transition as smooth as possible. So a bit on the slide there about what you can expect from the sessions. So, you know, understanding the legislation and exactly what it's going to mean for you as a business. It is delivered in small focused groups, so you get focused attention and the chance to ask any questions as well. And there will be a session on guiding through implementations with hands-on product-specific sessions also. So charges will apply for the service, but if you are interested, if you email sage50webinars@sage.com to register your interest, we can get one of the team to reach out if that is something that you'll be interested in. Thanks again from me and Duncan for joining us today. Hopefully we will see you again soon, but it is bye for now.